Council of North America and the AMJA, the Assembly of Muslim Jurists, and they did a complete, I think it was 2011, where they did a complete overview of all the Islamic financing institutions in the country. And as they went down the list, I realized, while reading the article, I realized that not one of these organizations were 100% Islamically compliant. There was just one institution in California. It was called Amin Housing. The problem is Amin Housing only functioned in California and Texas, and they had a huge waiting list. I know of many professionals, engineers, doctors, lawyers, who have not bought a home in the US because of this reason. I found out about NIA a few months ago, and I shared it on the Young Professionals chat as well. And NIA has the same model as Amin, and maybe Brother Safir might go into the details. But right now, they are financing homes throughout the country. And Alhamdulillah, a brother from Andover who has financed through NIA, he's the one who coordinated this talk. I'm very excited, and a lot of Muslim professionals are very excited because we finally have a completely, Islamically compliant option that we can go for home ownership. Jazakallah khair, Brother Safir.
Assalamu alaikum. So I think Brother Bilal had proposed that I usually give 2 sessions, one on either introduction to personal finance and helping people kind of navigate about their personal finances, or we can talk about general halal finance, and then people are very interested obviously in NIA and kind of the model it proposes. We can try to squeeze in both, but I just want to see a raise of hands of, is there any particular interest? If you're interested more in personal finance, like raise your hand, and then if you're any more interested in personal finance? Okay, what about the home financing and NIA? Okay, a little bit more there. Let me go through these slides very quickly. We'll pause and have questions about it, and then we'll talk about NIA, if that's okay. All right. So when I talk about personal finance, what I really want to strive and communicate to people is how to build a values-driven framework for financial peace. And I can tell you that so many people that I talk to, especially after October 7th, it's completely changed their perspective on finances and their career and almost every aspect of their lives, it was kind of a wake-up call for us as Muslims in America to figure out what are we doing with our life, what are we doing with the resources that we have, and what should we be striving for, right? It's not enough just to give money or make dua, but we have to live it in every aspect of our life. And so that's the kind of framework that I've built for practicing my personal finance that I'll share with you. This is a little bit about my background. I have a website called muslim.finance. It's a one-page guide that you can go to that has a little bit more details with what we'll talk about today. We have a couple companies. One of them is called NIA. We have another company that does working capital for businesses. And I've been involved in various companies like Zoya as well. So when we'd like to talk about personal finance, I like to really focus on achieving financial peace. Most people, when they talk about personal finance, they're trying to optimize for the very last dollar and return on an investment, like where you can get the highest return. And they end up spending so much time kind of focused on driving the return, doing like short-term trading and doing all of these things to make a buck or $2, not realizing how much time that they're spending on that thing. And what I really like to emphasize to people is that make your money work for you, don't work for your money. You already have a day job, you're working and stuff like that. Use that money and invest it so that you don't have to worry about it every single day, right? And that's actually the best way to invest your money too, is to do it in a passive manner. It's been statistically proven that active managers of money, like in the stock market or whatever, are worse performers compared to passive investors. And so we as Muslims, first of all, we view money and wealth as a responsibility. not as an outcome. We're not trying to achieve a specific dollar figure for, what we're trying to do. It's an amana for us. It's a responsibility. How we use it, we can invest it, and we should invest it. That's actually part of our faith. But how we do so is very, very important. And to do that, most people, when they think about personal finance, they think about, if you're familiar with like these different products, maybe like something like mint.com, where you're tracking like all of your expenses. That's not really what financial peace gives you. If you want financial peace, you want to build a system that is automatic, where you feel like you have control, but you're not tracking every single dollar that I bought coffee on Saturday and I had dinner on Saturday, whatever. Like, what you want to do is generally have an idea of control for your finances. The important factor here is that, what does financial peace look like for you? It's dependent on you. I mean, for example, like maybe you have a special needs child, or maybe you have different various financial situations. I can tell you my financial situation, but that might be different than yours, right? So achieving financial peace for you might be, it's an individual thing. But really what we're trying to do is create a system. And the second, like, I would say, if you want to be a successful investor, mastering the psychology of money is more important than understanding how to read a P&L or a balance sheet and stuff like that. People make the most mistakes when they let emotions and their emotional judgment get in the way of making decisions, versus going and catering towards a system. So there's four key components that I liked about: budget, savings, giving, and investing. These are the four key areas of financial peace. And obviously, the Quran talks about this, where the principle of the golden mean, we might hear it like in a Western concept, but the Quran says to spend, don't spend excessively, don't be stingy with what you spend modestly, right? Again, the money isn't a manna for us. And so this is one of the books that I like to refer to people. It's a horrible, horrible title, but it's called "I Will Teach You to Be Rich." If you don't like reading, he also has a Netflix series. I think it's also called that. It's by Ramit Sethi, where he says that, in the end, managing your finances well is a lot like developing a strong personal productivity system. You keep track of everything without making it your full time job. You set goals, you break it down into small tasks, you save yourself time by automating manual work, and you spend your time and brain power focusing on the big picture. That's what I try to do with my time and money. It's not about saving every dollar or tracking every dollar, it's about building a system that works for you. This is just an example of the power of compounding. It's like one of my favorite areas to talk about, which is the biggest value to investing is time. The longer time horizon that you have, the better. So this is an example of someone contributing $3,000 a year. That would be about, maybe just shy of $200 a month for 40 years at a return of 6%. He's not doing anything crazy. He's just getting about 6% return in the stock market. And you can see that balance grew from $0 to about 500K over the course of 40 years. So it's about doing, one of the biggest things that I like to emphasize to people is about doing it consistently. And this is another author, one of my favorite authors, Morgan Housel. He has a book called The Psychology of Money. And he has a book called The Psychology of Money. And this is like a tweet of his, of basically just like, shut up and wait. Like, literally, just don't keep looking at your account and over, analyzing it and stuff like that. Invest in it, create a system, and generally, if you're on the right path, things will take care of itself over time. In terms of, I'm going fast, so forgive me. I want to talk about the home financing aspect, as many of you want to hear about. In terms of budget, what I like to do is, um, I like to break my budget down into, have about 2/3, if you can. Obviously, not everybody will be able to do this, but I like to break my budget of whatever income I'm getting, 2/3 into like living expenses, and 1/3 I split that between giving, investing, and savings. Right, and the way to tactically do this is, I make two checking accounts. So when I get my paycheck, I split it up. I put 2/3 of that paycheck into one checking account. The other 1/3, I put it into another checking account. I pay all my bills, my rent or my mortgage or whatever, from the first account where the 2/3 it's going. So that account should be almost zero or might have a little bit of money. The other account is, think of it as, we don't need to have a savings account because obviously you would make interest on that. So that's why I'm suggesting make a second checking account. And from there you do your giving, your automatic investing, and then whatever is left in there becomes your savings at the end of the day. So when we talk about spending, one of the things I like to talk about is that we live in a very hyper consumer environment. You know, everybody posts everything on Instagram. So these are my personal questions that I like to ask myself: is that, would I still buy this if nobody else knew? Am I actually buying it because I like it and I want it, or because I think someone else will think, something of me because I own this thing? What's the trade-off between time and money? A lot of us sometimes we're concerned about, like, I have this example here of, like, if you spend 30 minutes every day spent trying to save $10, it's like not a winning strategy. Like, if you did that for every day, you'd have saved $3,000, right? There's a lot better ways to use your time, and I think that time is more valuable than money. It's not equal to money; it's more valuable than money. It's something that we can never get back. And then balancing the concept of now versus later. In terms of savings, I like to break it down into short term versus long term. So your short term goals might be like an emergency fund or buying a car or saving up to go to Hajj. In terms of investments, those are longer term goals where you can actually park it away for some amount of period of time, like at least a year. And that might be towards like a down payment or your retirement or something like that. Generally speaking, you don't want to invest your savings, right? You might need it for an emergency fund or whatever, but you want to um, use whatever else that you have besides the savings into investments. So generally, the rule of thumb is like have at least 3 months of savings of whatever expenses that you have, but you might have some other shorter term goals like Hajj and stuff like that. So you might want to amp that up. So in terms of investing, I believe that there are like three pillars. One is to keep it simple. You don't need to be a genius. Keep it automatic and keep it long term. Just like, our faith prescribes that the best of deeds are the ones that you do consistently. That's how I treat investing as well, because you're removing the emotional element out of it. Instead of saying, oh, the stock market is down or the stock market is up, people like base their how their day goes based off of like how the market is in the morning. Like, don't do that. I don't even check the market, like maybe on a quarterly basis. Make it automatic. Every week, I have a basket of stocks that I'm buying automatically. I'm not thinking about it. I could forget about it. And when you do it automatically, you become less emotionally invested in it and focusing on the long term versus the short term. So those are kind of like the three key principles that I like. In terms of investment guidelines, I think this is kind of the rubric that I would suggest that you use when you're thinking about investing, which is based off of your time horizon. There's different guidelines that you have, and this is not like my specific thing. If you look at a conventional like American investment guideline, it's very similar to this, except it has some component in the fixed income category, which is like bonds and stuff like that, which we cannot invest in. So if you have a longer time horizon, if you're young, like me, obviously we don't know when we're going to pass, but generally speaking, you can have most of your money in the stocks. It's generally higher returns, it's more volatile, but you can manage that volatility. If you're older, if you're getting closer to retirement, you can't afford that volatility. If the market falls 30%, it could have a significant impact on your retirement savings. And so that's why you need to move to something that's a little bit more consistent in income and stuff like that, like real estate or whatever. And then if you're in the middle, there's a specific guideline. So what I recommend to people is literally just make a spreadsheet, right? Write down all of your assets. I have X in stocks. I have X in my 401k, and tie it back to some guidelines. It doesn't matter if you choose 90% for stocks or 80% to stocks, but whenever you're making an investment decision, you're going back to this rubric and saying, these are my guidelines. How does it fit back into this thing? And again, it forces you to be systematic with the process. That's what we're trying to do. So this is an example, like you make your different list of stuff, and I can send you Whoever wants, I can send you a template for this as well. In terms of giving, like we talked about, I like to do like automated giving, and I use this tool called Charity Vest. It's free. It's called a donor advice fund. Basically, you donate to Charity Vest. They're a nonprofit, so you just get one tax receipt a year, and then I do all of my donations from there. And then what you can also do is that, if you work in tech, you might have part of your salary coming from the company giving you some restricted stock options, so you can slowly start to liquidate those and donate them basically and avoid unnecessary taxes. Okay, we'll talk about primary home a little bit later when we talk about NIA, but just broadly speaking, because this is a hot topic typically for especially people my age, I encourage people to buy a home. But what I like to share with people is to be very conscious about why you want to buy a home. And it's not, sometimes people, when they talk about renting, they think of like you're not building any equity by renting, right? Well, if you get like not something like, if you get a conventional mortgage, like you're not building equity either. Like 90% of the payment is typically going to interest, and then you're paying your taxes and insurance as well. So I encourage people to buy a home, but just do the math, right? Of like, it's not necessarily that buying a house is quote unquote cheaper than renting, especially in expensive areas like Boston, or I live in California and San Francisco. It's very expensive for houses. So that's not the only reason why to buy a house, but it's one of the factors, right? Obviously, you want family, stability for your kids, whatever. But just do the math and be cognizant of how much it's actually going to cost you to do home ownership, and it's expensive. The other thing I think is really, really important to stress is that your home, your primary home, if you own one or want to buy one, it's not an investment. It's a place to live. There are many consequences when people treat their primary home as an investment. And I've seen many examples of it. Like one of the most common examples that I've seen is like an older person who's getting older, he's in his 50s or his 60s. He's kind of always had this mentality of viewing his primary home as an investment. And he feels like he has to keep that investment for his kids or whatever. And for example, he might live in like a 2-story or a 3-story townhouse or a house, right? And as you get older, you can't necessarily afford to take the risk of, like, for example, if you fall down the stairs or something happens to you, it could be detrimental to your health. But sometimes people view their house as an investment, so that no matter what, like, they don't want to sell this house or move to a smaller house or move to a condo or whatever, right? When you have that mentality, it's very dangerous because you're kind of mixing kind of what the house is for. The house is for to live in. Live in the house. It's okay. Like if it costs more for renting, it's totally fine. But make that decision for living in the house, not for investing. Um, there are other ways to make money for investing that are equivalent to buying a house. Just don't treat it as an investment. That's kind of my message to you. But still, please pursue buying a house. And obviously, we have Nia to help you with that. I don't want to discourage people from that. I just want you to be cognizant of all the factors that are involved in that. This is the last slide that I'll talk about personal finance, and then we can do a little bit of Q&A and then jump into talking about Nia. So these are some quotes from Morgan Housel's book that I really like. One of them is, and these are very aligned with our principles as Muslims too. Like we are not in the business of seeking wealth to the nth degree, right? So he says the hardest financial skill is to getting the goalpost to stop moving. I made some money. Now I feel like I want more money. Another one of his quotes is like, wealth is what you don't see. Everybody thinks of wealth as like, oh, this guy has a Ferrari. That's not wealth. Like that's wealth spent. You spent that money. Wealth is what people don't see. You will desire less if you care less about what others think of you. And then few things matter more than understanding your time horizon. So just a few key takeaways is, financial peace comes from systems. You don't need to track every transaction to feel like you're in control. Have a budget, have savings for your short-term needs, have investing for your long-term needs. Giving is a core component of our faith, there's barakah whenever you give money. and balance matters. Like you don't need to take any extreme angle of trying to save every dollar or get the most amount of money. Have a balance, and that will make you a better investor, and just allow you to focus on things besides just accumulating wealth or whatever. I'll pause there for any questions, and then we can jump into talking about Nia.
Assalamu alaikum wa rahmatullahi wa barakatuh. You mentioned a bit about buckets of stocks and ETFs, I'm assuming. What do you think of crypto?
So I think I had a. I view that in the alternatives category of putting 5% of your portfolio allocation in crypto. I think it's more relevant generally for people outside of the U.S. because their currencies are often very volatile. Like many of the countries that we come from, it's very volatile. So it's more relevant there, but it's quickly becoming a thing. And the government has backed, has made the concept of stable coins like USDC and stuff like that. I'm an investor in a company called Inshallah, which does like crypto staking and stuff like that, which is becoming pretty popular, which is a potential alternative for a money market or a bonds short-term type of savings as well. So I do believe in the concept. There's just a lot of work to do, but again, I always tie it back to my system, right? Of like, this is my bucket for crypto and alternatives like gold. Do it in there. So yeah.
Assalamu alaikum.
Welcome, sir.
Is all the stocks as halal, or there is halal stocks and halal ETFs you can invest in?
Yeah. So the general rule of thumb. So I'm an investor in a company called Zoya, ZOYA. You can check it out. You can look up any stock or an ETF and see if it's halal. But basically, the principles. There's three core principles. Number one is 95% of the income of the business has to be from halal sources. So if you had like more than 5% of the business coming from like alcohol, let's say, it's not permissible. All three of these conditions have to be met. So that's the first one. The second principle is that the business cannot have more than 30% of debt. There's a difference of opinion of whether it's debt compared to the market cap of the business or assets, but generally it's not more than 30%. The third is I forgot the threshold, but not more than, I think it's 30% or 10% cannot be more from interest income. So those are the three premises. And obviously the business cannot be engaged in any like haram activity and stuff like that. So if you look up Zoya, it makes it easy for you. You can plug in any stock and do that. In terms of I generally actually don't recommend people to do individual stocks. Like it's best to invest in something like an ETF or a mutual fund. So in terms of ETF, there's one called SPUS. That's a Sharia filtered version of the S&P 500, which is like 500 of the stocks. So you can use that. There's also Amana. You can invest either in Amana mutual funds. You can either invest in Amana growth or Amana income. Those are also really good halal options. By the way, if you compare any of these to a traditional index, they will perform equal, if not better, than like a conventional index. So I would highly recommend it, and I mostly am investing in an index as well personally.
We'll take two more questions regarding personal finance.
Jazakallah khair. Just building on that question earlier on halal stocks and ETFs, with SPUS and HLAL and Wahid and all of them that we found, in the long term, I've seen some of these have higher expense ratios, cost expense ratios. Do you think it's all right in the long term? You're obviously looking at a long-term investing strategy, 20 years down the line, even if it's performing really well with S&P 500, does it kind of negate the overall effect?
Yeah, I would say so. So like SPUS, I think is like 0.4%. I don't remember specifically, but I think it's like under 0.5%. Amana is a little bit more. But honestly, I would be okay with both. Like Amana has probably been low teens for the last 10 years, like annual percentage every year. So in the long run, it's way better than trying to manage individual stocks. I think anyone who's doing that might get lucky sometimes. But in the long run of things, you want to automate the process as much as possible. And if you use like Chase or any of these things, you you can set a schedule to automatically buy a mutual fund typically. I have a basket on my website, Muslim.finance, where I publish my portfolio, and I use this application called M1, which allows you to automate it. But yeah, I literally am just buying like $150 to $200 of the stock market every week. That's all I do. Yeah.
Assalamu alaikum.
Walaikum salam.
I am 65 years old.
Alhamdulillah.
Inshallah, 2 more years to retire if Allah.
Inshallah.
Inshallah. So my question is, I used to work in no private. It's like a taxi driver a long time ago. So I didn't put a lot of money on my security social. So 15 years ago, I started working with the hospital. So I started making some money and put the money in this. I don't put the money, they put the money. But you know, now if I retired at 67 years old, my retirement will be too low monthly payment. So they encourage me to force me to put a lot of money on the market. But which one? It's risky. If I put all my money, it's risky now because I can lose everything or I can make money. But you know, my goal is 67, 2 years from now. What's your suggestion? Thank you.
Yeah. So that would be kind of in this chart of like the 10 years, right? Where you don't want to have all of your, I wouldn't use 10 years, but like maybe use like, I wouldn't put all of your money in the stock market because again, if it could crash like 30 or 40%, right? Unfortunately, there's not a lot of good like halal options I would recommend for something like a fixed income. The best alternative to fixed income is real estate. But that's also there's some like gatekeeping there. It's not necessarily easy. So what I would probably do is don't put as much in the stock market, but then you know Amana has like an Amana income fund or even Sharia portfolio, which is the company that's behind SPUS. They have another one called SPRE. It's a real estate investment companies. Nia also has like an investment portion, but it's pretty limited in who we can take money from. So something like an SPRE would be good to kind of get some fixed income, like some stable income coming in. But yeah, I would definitely not put all of your money in the stock market. Try to limit it to probably like no more than 70 or 60%. Good. All right. Happy to answer more questions after. I will switch gears to talking about Nia. 1 second. Okay. I'll try to go through this quickly as well. So what we're trying to do with Nia, and I'm not here to talk specifically about Nia, but I'll try to touch on like the points of like Islamic finance and stuff like that that you know Brother Bilal was kind of mentioning. Nia is a model where we have joined both homeowners and investors in creating a model that's 100% debt free, and it's the homeowners and investors owning a home together. Versus the traditional mortgage market is I, as an individual, go get a loan from a bank. I have a loan or debt basically from them. I pay them off. I bear all responsibility on the risk and reward associated with that. So why we started Nia, as like Brother Bilal was mentioning, there's a very wide gap between, or Brother Bilal was talking about the skepticism of many people have to the Islamic mortgage industry. And kind of one of the effects of that is that there is a significant homeownership gap between Muslim Americans and average Americans. And actually, if you look at the socioeconomic data, it's not like Muslim Americans are less well off than the average American. It's actually pretty similar. But why is it the case that Muslim Americans have significantly less home ownership than an average American? And one of the reasons for that is many people are skeptical of kind of the existing models that exist today. And eventually the net effect is that many people don't buy a home. You know, even if they make good money and they could get a loan, they don't feel comfortable with the options. And so many people that we've even talked to with NIA or even helped have waited for 20, 25 years to buy a home, to buy it eventually out in cash or just decided to rent for it. And so that's really why we started NIA, inspired much by Amin Housing, which is based in California, but mainly services California. I think if you think about Islamic finance in general, it's been historically catered around making contractual changes, changing interest to, this is an over exaggeration, but changing interest to profit as a terminology. It hasn't really changed the economic or the substance form of it. The substance form of Islamic finance is very simple. You cannot have reward without risk, right? At the end of the day, it really boils down to that. And that promotes a concept of a partnership model, not a debt model. So for example, if you buy a home and you get a mortgage on it, the bank doesn't care if it's built on swampland. If something happens to the home, they still get their loan money back. Right? Like even if the house price goes down, you still owe them whatever X amount is due on the house. For someone like Nia, who's an equity partner with you, it matters where you buy the house, right? Because we will participate in the gain or the loss. We even share in things like taxes and insurance and stuff like that. By doing that, you've created an economic model where both people are aligned on the same side of the table. Versus in a debt manner, the two parties are never aligned. The bank has given you debt, and it doesn't matter to them what happens to the house, you still owe that debt at the end of the day. And so what the Islamic model is really prescribing to is to benefit both parties that are involved with taking equal risk and reward. Now it's a disputed who it's from, but there's a quote by Umar ibn al-Khattab, I believe, which says that to invest the money of an orphan so that it doesn't get consumed by zakat. So if you have money in your bank account, if you think about what do you pay zakat on? You pay zakat on money that is sitting and is not in circulation. If you were to, there's different like rulings on it, but if you invest in the stock market, generally you don't pay on the value of the stock. You pay on whatever assets basically the business has, right? Or if you invest in real estate, like you're not paying on the value of the house. You're just paying on whatever money that you collected that's in your bank account. Why? Because zakat is really for money that's not in circulation. When money is used in circulation and it's done with the right principles of sharing and risk reward, it's beneficial to all parties because you need a system to be able to circulate money for people that need to buy a house or whatever types of things. It's that when you create when you use something like debt, that's a one-way transaction. That's not a two-way transaction. When you are able to build a cycle, that's when you're able to benefit all parties, but all parties are also taking risk at the end of the day. And that's really what we need to be striving for in terms of Islamic finance. And so what the community told us when we started thinking about NIA is that we want genuine risk sharing. Whoever is helping us buy the house should participate in whether the house value goes up or whether the house value goes down. They want profit and loss sharing. They want to share in taxes and insurance. This is what the community, has been calling for in Amin Housing, and there's also another one in Toronto that has been doing this for a while, but it's never really scaled nationally. And so the way that our model works is that someone puts in, let's say that we're buying a $100,000 home for the sake of the argument, and the homeowner is putting 20% down. And then NIA puts in about 80% down, for example. Then what the person pays a homeowner, instead of paying like a mortgage, they pay whatever the rent is, whatever the market rent for the house is. And the government publishes actually some data about what rent is in a specific area. So let's say the rent was $2,000 for the sake of the argument, and the homeowner owns 20%. So they would only pay whatever rent for whatever portion that they don't own. So they already own 20%. So let's say it was $2,000 and NIA owns 80%. they're going to pay whatever $1,600 basically, right, for the rent, whatever portion that they don't own. And as they build up equity, that number is going to go down because they own most of the house, and Nia is going to own less and less. They also pay their share of taxes and insurance and major repairs. So 20% taxes, 20% insurance. We pay our share. We pay 80% taxes, 80% insurance. Now you might be wondering, like, well, what's in the benefit for the investors, right? The investors, if you were to buy a rental income property, all we're doing now is, instead of buying 100% of a house, you're buying 80% of a house. And before, actually, Nia, we had different funds, and we had about 100 homes in the suburbs of Michigan, and it was extremely, extremely painful. I never wanted to do it again, because every like 18 months there's a new tenant, carpet, paint, couple months for when the tenant leaves. In this model, the tenant owns part of the house. The tenant is not leaving. The tenant, the way that they take care of it is completely different than a tenant would. And I tell people sometimes, like, I feel like we as Muslims, we're like skeptical of like the Islamic model ourselves, like, because we're so used to seeing the Western world. But you realize when you see this, that the Islamic model is better for the investors too. So that's, I think, what we need to be thinking about, is that, like, we're just so like brainwashed in the debt model that we don't see like what our faith actually prescribes and why it prescribes this and how it's beneficial to all parties involved. And so that's really how the model of Nia works, is that someone is renting, and then they can buy additional equity whenever they want. They don't have to. They can buy additional equity at a later time, and that's determined off of a market price. So the government also publishes like how much the market is moving in a particular geography. So based off of that, we will adjust the share price. So if it goes from $100,000 to $105,000, and someone's buying 10% of equity, they're buying $10,000 for $10,500. So we get some realized appreciation in that fashion as well. And so that's really kind of what the model entails. And we've set some caps also for, we don't want it to become a fleeting thing like Boston has. Home values have appreciated a lot. So we don't want to make the price be so difficult. So we have a 5% cap on how much the home value is going, and also on rent increases as well. So comparatively to any of the existing models that exist today, we share in the profit and the loss. If we bought a house for $100,000 and 5 years later you decide to sell it and we're part of it, for $80,000, we will only take whatever share that we own. You're not owed to us whatever. There's no loan concept in our model. We share in the property tax. We share in home insurance. We need a new roof. We need a new HVAC. We need an AC. We're going to participate that equally for whatever our share that we own. There's no late fees. There's no selling to Freddie Mae, Fannie Mac. Our money comes from the community, from investors who want rental income. And this is an important concept also, is that we don't have a concept of foreclosure. If you go to a regular bank, or even some of the Islamic mortgages, if you stop paying on your house and the bank repossesses it, whatever equity that you have ever built into the home, it's gone, all wiped out. Once the bank forecloses on it, it's their property. With us, if you cannot pay rent for, let's say, 3 months, we will agree with you to basically sell the house, and then whatever equity that you own, whatever money that you owe us in rent, we just deduct it from the equity, and then you get the rest of your share, even if it had gone up in value or whatever. And so we're preserving the equity of the homeowners as well, and avoiding foreclosures because of that. This is a little bit about our team. This is our Sharia advisor, Sheikh Umar Khan. He serves on the Fiqh Council of North America. And recently, we also just got our AMJA approval a couple of weeks ago as well. This is a little bit about our timeline, and this is a long journey, and I'll explain a little bit more. But yeah, we bought our first house in 2023 in Dallas. And 2024, we started growing, and last year we bought 30 homes. Out of now, we have about 44 homes. So we grew like over 300% last year. And we're in 15 different states. We bought our first home in Boston, I think in November of last year, in the Malden, in the Andover area. Yeah, thank you. We're actually concentrating a lot on the Northeast right now. because one of the things that we do is we monitor the housing markets across the country, and one of the precursors to home prices is supply and demand, like just like any economic model. And right now there's a significant lack of supply in the Northeast, Boston, New Jersey, New York, even areas like Chicago and North Carolina. So we have a long wait list, but we prioritize for the sake of our investors as well of what areas that we see are going to be beneficial both from a rent perspective and long-term appreciation, because we also benefit from that. So right now we're about $14 million of money that we've deployed. We are typically buying about 10 to 15 homes a quarter. And to date, we've raised we have purchased about 40 homes. We have about 2,600 people on our wait list now. And by the end of this year, we want to, inshallah, reach about 100 homes. So one of the downside of this model is we're not selling to Freddie Mac or Fannie Mae. We don't have any magic, bank at the other side. So we have to raise our money from the community, and that will come over the time. We're not here to pitch anybody about investing, but the money comes from the community. It doesn't come from anywhere else. And you can see kind of a map, a geography of where some of the homes that we have are. This is a testimonial by one of our homeowners, and this is a little bit of our demand. We don't even do any marketing. It's just word of mouth from people. Right now, in terms of, many of you might be wondering if you want to be able to buy a home. This is a little bit outdated, but we prioritize our wait list on 3 areas. The first is if you need less than 400,000, not 300,000. So if you need less than 400,000 from our side, so let's say you're buying an $800,000 home and you're able to put 50% down, we can fund you up to 400K. We're trying to help more people. The less amount that we can give to people, the more people that we can help. In a key expansion market, and Massachusetts and Boston area in general are a key market for us. And also if you're an investor in the fund. That's how we're prioritizing the 2,600 on our wait list. Like right now, for example, we're deciding the people that will go for Q2. So every year we kind of every quarter, we batch up 10 to 15 people and then give them the green light to start purchasing. Our offers are, when we're purchasing the house, it's also cash, right? There's no debt or whatever. So sometimes you can get more favorable terms and close more quickly as well. We kind of touched on this already. I'm going to skip this. We talked about the dream tenant that we were talking about the other few slides ago. I think I'm going to. This is a little bit about our growth that we want to achieve. And really what we want to do is help the community move away from the mortgage industry, close the gap in terms of homeownership, get more Muslims to be able to afford to buy a home, and also build the Islamic finance model that's true to the principles that we're looking to seek. One of the other things that we're starting to do also is do education about personal finance. So that's part of the effort of why I'm here today, but also we have a bunch of online sessions that we've done. So we did a session with Sheikh Omar on Islamic principles of wealth and finance. I did one very similar to the introduction to personal finance a couple weeks ago. We have one on Zakah on Thursday. So if you're interested, if you go to our Instagram or our LinkedIn or our website, you can see more details about the sessions, inshallah. I know there'll be a lot of questions, so I'll stop there and we can talk about that.
My question was about, this is really incredible, and I'm assuming it's going to take a lot of funding from your own side to make it possible and to also scale it, inshallah, and that's the goal. But this is brilliant to see. I wish we had the same opportunity, but it's never late. My question, was for the personal finance, if that's okay.
Yes, sir.
Thank you. So you spoke about Amana, and people are asking about stock. Is that also a good company for 401k?
Yeah, I personally like to invest in the Amana mutual funds. I have like Amana Growth and Amana Income. And yeah, from your 401k, those are good options as well. Some people with their 401k, they have pretty limited options from what they can choose from. So I recommend that you plug in that index or whatever is available in your 401k into Zoya. It'll tell you whether it's compliant or not. And if you have an old 401k, maybe you worked somewhere and now you no longer work there, you can convert that to a self-directed IRA. So if you bank with Bank of America or any of the options, you can open up a self-directed IRA. I think Amana might have a 401k option too. I'm not sure, but you can, once you open that like Merrill Edge or Schwab account, you can invest in SPUS and Amana mutual funds or anything from there. So if you've moved away from that job, the best thing to do is move it to a self-directed retirement account, and then you'll have any option in the stock market to invest in.
In terms of the housing, I know in the other companies and even maybe the conventional, there's always a way that you can, if you have all the money you received, you can pay for the entire house. In your model, can people, I mean, I know it's renting, but can people still pay all the money, the percentage, 20% or 50, whatever left, and they can?
Yeah. So our goal out of this is to get people to own the house, right? That's our goal at the end of the day. We limit how much that they can buy of the house, 10% of equity every year. But after year 3, you can buy us out completely. So if you want to do one shot, whatever, like, well, let's say we own 50%, Nia owns 50%, you can buy us out completely. The reason why we have the 10% thing is because we will sell you our equity from Nia to you, whether the value is up or down. So the value can go down too, right? The house can go from 100,000 to 90,000, or it can go to 110,000. And based off of that, you will be buying some of the equity. So even if it's at a loss, we will sell you some of the equity at a loss. So by spacing it out over time, there's might be temporary gaps in the housing market, but over time, the housing market is generally going up, and that we can bear our risk there. But after 3 years, if you wanted to buy it out completely, you can do that.
So the price is never locked.
The price is never locked. That's the downside, but it's capped at, it can't go up by more than 5% a year. So if you're making like these 10% purchases, you will have the right, even if it goes from like 100,000 to 110,000, you will be able to buy at 105,000, no more than 5%, because we don't want the price to be fleeting for the homeowner. We want, the whole point of this is so that they can own the home. But we just want to make it as comparable to market as possible. If we do a fixed like thing, then it becomes like riba, right? Which we're trying to avoid.
Assalamu alaikum.
Alaikum salam.
In terms of overall making good financial decision, do you recommend people buy their equity? Like, let's say at the end of the year, you have some cash left over. Do you recommend people buy their equity, or do you recommend them to invest that money into the halal options that you mentioned?
It's more of a personal like decision, honestly. It really depends. I think either option is okay. So we don't require people to purchase equity. We don't want to force it, because we don't want it to even go near like the riba based system, if you will. But you can do either or. You could invest or buy down the equity of the house. I think honestly I would just do a balance of both, so that it doesn't become too fleeting over time, that the price has gone up so much that you can't buy it over time. But I know many people also that could buy a house that just choose to rent, and they don't necessarily want to buy a house, and they're just investing that money. That's fine too. It's really a personal choice.
So do you guys no longer offer services for people that want to buy residential homes or buildings, or is it only personal homes? So
yeah, only personal single family homes.
Oh.
Yeah. Not single family, like personal residential homes. We've bought condos and townhouses too. Yeah. Not for rental. Yeah. So yeah, not multifamily. Because from our perspective, like the model I was explaining to you about, our risk profile has been significantly reduced by our tenants also being our co-owners, right? So it reduces our risk profile, and so that we want to keep it that way. If you want to invest, it would not make sense to buy a rental property with Nia, because the payment would be the market rent anyway. So you might as well just invest in Nia. Yeah.
Assalamu alaikum.
Alaikum salam.
Jazakallah khairan for sharing this. I appreciate it. I'm actually from Toronto, and over there we have Manzil, which
Yeah.
is another Islamic financing option. My question was more so about like the requirements. If I wanted to buy a house, like what would you vet for? Manzil usually they check like credit score and a few other things. So what does Nia do?
Same thing as
Same
like
thing?
even like a conventional mortgage. Like the only thing different than us is sometimes in conventional mortgages they change the interest rate based off of your credit score, right? So if you have, I don't know, 600 credit score versus 800, they'll give you a different interest rate. That's not the case for us. It's whatever the market rent is, that's what you're paying. It's not dependent on whatever your characteristics are. But in terms of like qualification criteria, it's generally the same, like 1/3 of your income. It should not exceed 1/3 of your income and yada yada. Yeah.
Have you guys done any sort of like studies or analysis on the relative difference if you were to buy like a 30-year mortgage versus if you were to go with your plan?
Good question. Yeah, I get this a lot, and I have to build a graphic for people for that. It's very hard to do so because the way people will build equity in NIA over time is the price will fluctuate up or down, right? And even the rent will fluctuate. We assess the rent also annually on the basis, and it could go up or down. So it's very hard to say, but if you were to plug in like an assumption that if the house price were to go up like 5% every year and you were buying, for example, like 10% every year, it would probably be not more than like a 6% mortgage or something like that per se. But that assumes like a 5% increase every year. So that's some like internal math that we've done, but we want to make a graphic out of it so people understand as well. Yeah. We're working on it. I think we have an internal solution, so I can maybe after get your email and share it with you. Yeah.
Alaikum.
Alaikum salam.
Thank you again for the presentation. I learned a lot. I was just wondering, I know there's like a wait list, of course, for the people who are looking to buy a home, but then what's like the work behind the scenes to actually find Muslim investors who are willing to do so, and what's like the wait list or process for that?
Yeah. So if you're kind of in the 3 criteria that I talked about over here, if you're the first 2, we can even probably like fit you in like next year. If you meet all 3 of these requirements, you're probably even looking at as early as the end of the year to be able to get on the wait list because we're prioritizing based off of this. In terms of what's our strategy for investing, so I just my personal take is I don't believe in like advertising or doing like explicit like marketing towards investing. We have all on word of mouth. So my father and I, we've been running real estate funds for almost 10 years before NIA, and we didn't even have a website. It was just like our friends and family, like people told each other and stuff like that. So for NIA, we have like an invest page on our website, but that's literally about it. And they book a time to talk to me or whatever, and 99% of the people that I talk to, I ask all of them like, where did you hear about NIA? And they said, my friend told me, or my dad told me, or something like that. So we rely heavily on that. That's the best way that we believe in, and we're raising about between $2 and $3 million on a quarterly basis. But the more people know about it, the more other people tell each other, and that's how it kind of grows from there. But alhamdulillah, once we reach probably about 100 homes and stuff like that, that's when we can start going to institutional capital to also invest larger amounts. And some of the companies that are similar to us in the UK have actually done this. We would still maintain obviously our debt-free model and stuff like that, but there's an opportunity for larger investors kind of to put in 20, 30, $40 million into the fund.
Another quick question. I'm not very familiar with like the mortgage rate in the US, but what's like the profit rate for NIA versus the mortgage rate?
Yeah. So we don't really have a concept of a profit rate because it's not like you're paying X percentage on a loan. Like there's no even loan in this model.
Yeah.
So when we buy a home with someone, it says homeowner and NIA Fund 1 on the title. There's no lien on the house or anything like that. So it's very hard to equate it to a profit rate. But if you wanted to, I don't like using this terminology, but if you wanted to equate it, you can think of like the rent. you're not building equity in the rent that you're paying NIA, you can equate that to like interest. Your interest in a mortgage payment, which in the beginning is like 90% of your thing. Yeah. So if you want to equate it to that, you could do so. And also the other thing is that it depends on each market. In Boston, it's based off of the rents of that particular house. In Boston, there might be houses that are very expensive, but they only rent for like $5,000 or $6,000. Versus in other markets, it might be same rent for half the price of a house. So it's dependent on that, if you will. So it's not easy to say. The other conventional like Islamic finance mortgages, they're typically the interest rate plus 0.5% or something like that.
More questions? Yeah.
Assalamu alaikum.
Walaikum salam.
What's the requirement to be an investor with NIA?
So you have to be something called an accredited investor. That's not our rules, that's the SEC rules. It basically, you have to make at least 200K as an individual or 300K with your spouse. Or you can have $1 million of assets besides your primary home. If you meet those criteria, you can invest. That's because we have a more public nature of investing, if you will. So it's an SEC rule that abides us for that purpose.
And the second question is, let's say I bought the house in partnership with NIA. There is like a 2 year, after 2 years, I can start buying my share from NIA, or I have to wait more than that?
You can buy immediately. Like, first year, you can buy 10% a year.
10% every year.
Equity every year. Or after year 3, you can buy us out completely.
And how is the process? Like, take longer or take short process?
What do you mean?
Like, let's see, I contact you and say, I want to buy 10%.
Oh, yeah.
How long is it going to take?
Oh, like a day. Like it's not. Oh, we assess the value on an annual basis, but some of our residents are just, they add like $300 or $400 to their monthly payment, and that goes to the equity. So every month the equity percentage would change, right? Like let's say they owned 80, it goes to, I don't know, 79.5, or 80. Let's say they own 20, it goes to 21% or 22%. So either that way, or most of our residents actually, like at the end of the year or something like that, they calculate how much savings that they have and then they buy equity. So the value is assessed on an annual basis on the anniversary date of the purchase, but you can buy equity at any time, and you just fill out a form on our website and then you're able to buy equity. Yeah.
Jazakallah khair.
Yeah.
I think that is it. So Jazakallah khair, Brother Safir. And for those who are not aware, Brother Safir is here visiting for a conference at Harvard tomorrow. The Muslims in Business Conference is the inaugural Muslims in Business Conference. If you guys have tickets, inshallah, we'll meet Brother Safir again tomorrow.